For the past 2 months, the pound has been taking a cliff dive because of CPI data that came out in April. Will the pound see a relief with this week's data release? We'll talk about it here at Capital Markets. Traders, what's up guys? Welcome back to Capital Markets. I'm your host Cleveland Bishop, and here at Capital Markets we give you guys the technical and the fundamental approach every single week. So make sure you guys stay subscribed, whether it's technical analysis looking at the euro and the current market structure, or whether it's monetary policy coming from Japan. You guys will hear about it here, okay? So make sure you guys stay subscribed. And as always, if you guys ever have any questions, comment down below. Our team will be right there to assist, all right? So real quick, guys, I want to show you a screenshot of the pound on a weekly perspective. You guys can see that the pound has been taking a nosedive, right? Earlier in the session, we just broke a low on the GBPUSD, and we still have downside potential. We don't have CPI or GDP data coming out for the next 2 days. GDP data coming out on Friday. So this GBP can really go so many different places. Lots of monetary meetings and monetary speeches this week as well from Carnegie. What is going to happen to this pound? If you guys look back for the past 2 months when it comes to CPI, you guys will see that the pound has missed target. Is this going to be another scenario where the pound does not perform well? We're going to see this week and start to interpret where this market can go, right? So now this pound looks like it's been selling off a lot, but remember the US dollar in the same exact time has also been bringing in a lot of strength. So that's been adding to that downside momentum. US dollar, lots of strength coming in because the US economy is bustling a bit. Retail sales did tick up for the past 2 months, and GDP has ticked up, and we're seeing signs of inflation. That's why you have a 400 pip move across most US crosses. And that's why even a more massive move here on the GBP. You have the GDP getting weaker, the US dollar getting stronger, boom. Now you have yourself what we coin as a parabolic move. That's two currency pairs moving in opposite directions, bringing a massive gap into the actual currency price. Okay, those are the type of moves that you want to look for. So we'll keep an eye on the pound. If you guys look across the board again, here's the GBPAUD as well. You guys can see as the pound is selling off. So across most currency pairs, the pound is not doing so well. We'll see what happens. And today there is a bank holiday for some of the economies in the G10. So we saw the euro kind of calm. We're also going to see the CAD not move too much. Those are ones that are experiencing a bank holiday, but the pound's markets are open, and you can see that sell side coming on in. Australia posted retail sales last night as well. Did not bond too well for the Australian dollar, yet we did see the Australian dollar gain just a little bit of strength over there for the GBPAUD. So that's been a catalyst to the downside move. When you look at the Aussie NZD, you do see that the NZD is still selling off relative to the Australian dollar. Really interesting stuff. Across the board, New Zealand is still taking some pretty major hits. We'll be talking about New Zealand not this week, but next week, because there is no data for New Zealand out this week. But we have a few things that are going to be released. So stay updated here at Capital Markets, and I want to make sure that you guys take advantage of any kind of currency moves over there for the New Zealand dollar, because it's been really one of the most hard hit currencies in the entire emerging markets and some of the developed markets as well. So outside of the central bank meeting happening in the UK, we do have a central bank meeting happening over there for the euro. That's going to be happening later this week. The euro right now, again, more than likely is going to see a little bit more weakness just based off of the stance that Draghi has been taking. He has not been able to see a rebound in the economy, and that's been what's been acclimating to this euro slide throughout the entire year. Euro across, again, multi-currencies has been at a sell, and we are continuing to potentially see that same thing happen. Over on the Euro USD, what are we going to see? Right now, market's hanging in there at the 17 highs. If this euro continues to sell off, we can definitely run back down into the 17 flats, potentially into the 16 mids. That'll be around 1650 to maybe even 1600. That's 16 flat. All right, guys. So outside of that, from a global perspective, this US dollar is still one of the top performing currencies in the entire world, and there's still more upside potential for the dollar index, which means there's more downside potential for that euro, Aussie, and GBP for those crosses there, right? So that's something that we're going to keep an eye out on. A few Fed meetings this week regarding the US dollar, but most of our data is going to be coming out next week. Okay, so guys, make sure you guys stay subscribed to the channel. Always, if you guys ever have any questions, please comment down below. I'll be right there to answer them. And by the way, folks, Capital Markets, we're a broker and we're one of the best in the industry, right? We have some of the tightest spreads, meaning you're going to be paying less per trade than anywhere else. And we route from some of the best liquidity providers, which means as soon as you put that position in the market, it's going to immediately be executed. Okay, that's something you need in a broker, and that's what we have. So if you head over to capital-markets.com and get your account started today, you'll see that. So head over to the site and make sure you guys get started today. I'm Cleveland Bishop. I'll see you guys tomorrow.